Welcome to NDTV Profit. I'm Mahima Vachrajani and with me is Puneet Jhaveri and you're watching Ask Profit. Before we move on to the queries and interesting management conversations lined up for you, let's take a quick look as to how the markets are panning right now. Well, markets have been resilient since yesterday. The Nifty 50 right now is trading flat, up by about 0.1 odd %, but the broader markets are doing well in trade today. Both the mid-cap 150 as well as the small-cap 250 have gains of about 2 odd %. Let's also pull up the overall Nifty heat map and see what stocks are buzzing in trade today. We have likes of is that M&M? Okay, no. Tata Motors. Tata Motors, which is up by about 2 odd % in trade today. There's Asian Paints also buzzing ahead of its earnings. Kotak Mahindra Bank up by about 1 odd %. Coal India on the back of its earning up by about 1 odd %. SBI up by about 1 odd %. Trent is also doing well in trade today, up by about 1 odd %. Eternal is down, seeing pressure of about 2 odd %. Yesterday also facing about 1 odd % of downtake. Tata Consumer down by about 1 odd %. Maruti also down by about 1 odd %. There's ITC also languishing in trade. It's down by about 1 odd %. Let's pull up the advanced decline ratio and see what that chart is indicating right now. Of course, it's the broader end of spectrum which is doing well. There you go, 1800 odd advances versus 380 odd declines, and that gap throughout the trading day has been widening. So interesting to watch out that, because both the mid cap 150 as well as the small cap 250 are seeing gains of about 1.5 to 2 odd %. Let's pull up the sectoral heat map and see what sectors are doing in trade today. There you go. There's Nifty Media up by about 1.5 odd %. There's Nifty Defense also doing well in trade today, up by about 1 odd %. We have Nifty PSU Bank, Nifty Energy, Nifty IT doing well. Nifty FMCG languishing down by about 0.9 odd %. Consumption is also not doing very well. Nifty Pharma down by about 0.6 odd %. Nifty Auto down by about 0.3 odd %. Let's pull up the constituents on Nifty Defense and see what are the counters that are actually kind of buzzing and leading that gains of 1 odd %. If we can pull up Nifty Defense, till then let's also see what are the other counters that are doing well in trade today in terms of the overall Nifty market. There you go, BEL seeing gains of about 0.3 odd %. Let's also pull up some other counters. Mazagon Dock doing well, HAL doing well, Cochin Shipyard up by about 1.5 odd %. Also pull up the BSE 500 if we can and see what counters are buzzing at the broader end of spectrum. There you go, Jindal up 12%, Apar Industries up 10 odd %. Symphony on the back of its earnings doing very well, above about 10 odd %. Significant beat across numbers and all earnings. KPR Wellspun Living on the back of UK FTA seeing gains of about 6 odd %. CCR Products down by 3 odd %. Some profit booking there after earnings. Arkin Chemicals down by about 2.7 odd %. Polymedicure is also down by about 2 odd %. But Puneet, M&M is in focus. What's the deal there and what's happening exactly?
Well, definitely. After earnings for Mahindra & Mahindra, we've seen that positive momentum continue for the counter. The other one I want to also mention is Tata Motors as well, because that is one of the key beneficiaries of this UK FTA. Yesterday also the stock was up almost 3 to 4%. Again up 2.7% today, and we've also had a Citi note on the company today. They mentioned that they could see a 40% correction in terms of prices for Land Rover in India because of favorable pricing as well as lower taxation essentially that India would offer UK. Currently I think the cars are taxed at 110% in India. That could come all the way down to just 40% for importing the completely built unit. The other one I want to just highlight is of course Shriram Pistons as well, on the back of results, almost up 13% on Q4 earnings as well. But there's also one more stock, Mahima, which is GCPL. We've seen the earnings come out yesterday. What were some of the key highlights?
Right, so it is buzzing on the back of its earnings, and numbers were largely in line, margins lower than normative range, but the commentary coming from the management is quite positive. In terms of the consolidated volume growth, that stood at 6%, and I had the chance to speak to Sudhir Sidapati, who is the Managing Director and CEO of GCPL, and Asif Malbari, who is the CFO of GCPL, whom I spoke to. Listen into the conversation.
Our priority is a company volume growth, not value growth. We price to recover costs and not price for growth. Our idea is to get more penetration in more years. So whatever the price growth is, that's the price growth. Our hope is that we can move from big single-digit volume, which we had last year, to high single-digit volume. This is what we would like to do in FY26, which means a little bit more growth. And then that's what we're aiming for.
Right. And in terms of margins, you did mention in your press release this time that they were below normative range. But from what I understand is that, we were discussing earlier as well that palm oil prices have now started to ease. That it's not the case how it was 2 months or 3 months back. How are you seeing margins improving, let's say, from a longer term perspective by FY27? What is going to be the normative range in which margins will be at? And secondly, what will be the levers that will be auguring the growth? One thing is, of course, palm oil prices going down, but what are the other levers that you think will augur the margin growth?
Sure. So I think firstly, as a company, we've delivered a strong margin profile of 21% at the company whole level. And these are on the higher side of the range which we've historically done. So we are in a good kind of shape in terms of the overall shape of margin. Within that, the India margins have been mildly lower. They've been around 150 bits lower than a normative range in last quarter, primarily coming on the back of the palm oil prices which were higher. We're seeing early signs of palm oil reduce. There is a possibility that palm oil prices will be subdued over the next few months, and hence more towards the latter part of the year, we should see margins improve and get back into normative range. We are not worried because these are not structural. These are short-term fluctuation in commodity prices, and hence we're quite reasonably sure we'll get into.
Got it. There was one interesting trend that I observed this time when FMCG earnings were coming out, and that was coming out from the commentary that these companies are giving. Just wanted to understand if that's the trend that you've also observed. It's something that the managements are saying that this time we've seen more growth in terms of lower end of products rather than premium products. And I wanted to understand, because you are very well penetrated when it comes to rural markets. Is it the trend that you are also observing, and do you think that there is a structural shift there that we are observing?
It's an interesting question you ask, and the answer, I'm thinking through the answer as you speak, because over the last couple of years, it's been the reverse, where it's been a market that has been premiumizing.
Right.
Have I seen a change in last quarter? Not discernible, but it's also fair to see that the kind of growth that we saw in premium, or the difference between premium and mass, have probably come down in the recent past.
Correct. Right. And in terms of your overall home care business that has, spurred this quarter, do you think that this growth is sustainable? And going forward, what is the kind of outlook that you give for your entire home care segment?
See, home care segment has 3 categories in it. Air care, which has seen secular growth and will continue to see growth. Laundry, which has seen recent growth over the last 1.5 years, but I think that will continue. And household insecticide, that did extremely well in Q4, but hasn't been doing well for many years. I hope household insecticide was aided a little bit by the season, which is we had a slightly early summer in North India, etc. So, but despite that, it did well. I hope that continues to do well in the quarters to come.
Okay. And in terms of, you did announce 700 crore of capex in your presentation. How are you going to deploy that, and what's the overall ROI that you're expecting out of that capex investment?
So these are capex investments which are done to support growth from a multi-decade perspective. So we've set up 2 new factories, one in Bordia, one in DN. And while the first phase of the factory commissioning has happened, there are expansions in the factory which are going to be happening over the next year and a half. So the capex is towards that. One setup, they actually support many years of growth. So that's cool.
Okay. And in terms of your pet care business, I believe that you are, betting big on that. What's the outlook like? I wanted to understand as to how big the market is, one thing. Plus, what's the kind of growth levers that you are observing in that particular market, and what's the outlook like from a longer term perspective, not FY26, from 5 years down the line, what is the kind of revenue growth that you're expecting, and how much of a revenue contribution in terms of your total revenue will that business be?
So it's hard to predict numbers in the future, but I think the underlying reason why we entered the pet care business is that it's a category with a long runway of growth. Only 1 in 10 Indians own a pet. And even those who own a pet, only 4% of what they feed the pet is packaged food. The rest of it is home food. So there's obviously a lot of runway of growth in this category. it's a category that we kind of understand. So we've got an informal joint venture with Godrej AgroVet, which is a sister company, which is going to make the product for us, and we're going to sell it. And we've created a new company called Godrej Pet Care with a CEO who's running it. And so we think it's a large runway of growth. And as a group, we have reasonable capability to win. The category today in India of pet foods is 5,000 crores. But if you take, let's say, a country like China, it's $20 billion. So, in India, if it is $600-700 million, in China, it is 30 times the amount. So there is only a matter of time before, like in anything else, India becomes China. So I think we will ride this long runway of growth up it.
Right, and one last question on your international business. Indonesia did see only 1% in terms of constant currency growth, but the overall MENA business is recovering. You also did mention that some of your capex will be allocated to a new factory that you want to set up in Indonesia, if I'm not wrong. What's the outlook like in terms of how recovery will take place in international business?
So I think firstly, when it comes to the Africa and Middle East and the GOM business, we kind of actually had a profit reset in that program. It was single-digit EBITDA margins. For the last 5 quarters, we've been consistently growing both absolute profits and margin. We brought the business to 15% margin. So it's a strong shape of the business. We do see that business actually kind of grow quite well, and we don't see the need for too much capex there. We adequately kind of provided for in terms of capacities to take that growth. When it comes to Indonesia, over the last 2 years, we had a CAGR growth of around 9% on volume. So it's been 2 solid years of volume growth. We do believe that there is a lot of potential in terms of the long-term potential to grow. And typically these investments in terms of new plants come in with a bit of a 5-year, 10-year horizon to kind of support growth. We believe that it's the right time to kind of set up a new plant to kind of take care of these future growth.
All right, so that was the management of Godrej Consumer indicating what FY26 looks like, plans with respect to their pet care business, as well as how international business will fare for them. All right, moving on to the Ask Profit segment of this show. We're joined by Shahina Mukaddam, independent market expert, and Kush Bora, founder of kushbora.com, joining us now. Welcome to both of you. The first question is from Shankar, who is writing in from Bengaluru. He's holding 900 shares of RCF, that is Rashtriya Chemical Fertilizer, at an average price of 133. He wants to know the outlook for the next couple of quarters. He wants to book profits once the stock goes about 25% of his acquisition price is something that he's aiming at. Kush, I'll come to you quickly on this one. Let's say 3 or 4 quarters down the line, is 25% achievable on something like an RCF?
Hi, first up, a very good morning to you, China, and all the viewers. Well, this is the Ask Profit segment of the show. I was quite interested with that line. But yeah, Ask Profit is the show, isn't it? So yeah, that's what I'm getting at. So nevertheless, as far as RCF goes, the stock's been in a bit of a consolidation. There is resistance around the 140 and the 145 zone. So I would suggest it's not a bad idea to perhaps book profit. The reason being that, if you look at the likes of Chambal Fertilizer, one stock that we've time and again had a buy call on, has been doing rather well, steady uptrend on this one. So if I were to pick something in this segment, I would actually exit RCF and look at Chambal Fertilizers, perhaps even a Coromandel, but Chambal Fertilizers is on top. So the good thing is that he's still in a profit on this one. So might as well take money off the table and switch to Chambal Fertilizers.
Got that view, Kush. The next query that we're getting is from Rahul, who's writing in from Shimla. He's holding KFin Tech at roughly 1,141 rupees per share, holding 100 shares there. He's looking for a view on a long-term suggestion on the stock. Stock has just seen some correction after, the quarterly earnings. But, Shahina, let me come to you on this. Earnings largely look in line. They're also estimating growth going forward. How do you expect KFin to perform, at least on the fundamentals?
On the fundamentals, I think it will do much better going forward. They recently acquired a company in Singapore, which actually enables them to expand their global reach. And while it is an expensive stock in terms of pure valuations. So I would say you can continue to hold. The results were also a bit disappointing, given the fact that it is linked to the overall market and the performance of the indexes. But at the same time, I would say you can hold with a stop loss close to about 1,100.
Okay, so that's the view with regards to where KFinTech stands. Also, viewers who are tuning in, you can also call us on the numbers that are flashing on your screen right now on the lower band of the screen. All right, the next question is on Cummins India. Pratap from New Delhi is holding 1,000 odd shares bought at 365 a piece and wants to have again a long-term and fundamental view on this particular counter. Shaina, I'll again come to you on this one. What's the view like for Cummins India?
Yeah, so Cummins India, it's like a mixed bag in terms of the performance. At the same time, I think one can continue to hold if one is looking at a medium to longer term, basically because I think the business going forward it looks to be better. So you can hold with a target close to about 2,900. Not too much of upside, but you can hold for now.
Got that view, Shaina. We have a first caller of today. It's calling from Chennai. Aditya is on the line. Aditya, good morning. Welcome to Ask Profit. What's your query?
Yeah, good morning. So I'm holding about 1,000 shares of Vedant Fashions, Manyavar.
Okay. And are you looking for a long-term view on the stock, Aditya? Hi, Aditya. Yeah, we've actually lost him. But Shaina, actually, let me come to you first. We don't know if the caller wants a long-term view, but we've just seen the results actually come out yesterday. Not so much to write home about. Growth has been faltering for the company. How are you viewing Vedant Fashion in terms of fundamental performance going forward?
Yeah, so the numbers were a bit disappointing, both in terms of the revenue also, and in fact, EBITDA was lower. So it has been a disappointing number. At the same time, I think it is better for us to focus going forward on the export potential with the trade agreements between UK, US all coming into fore. So I would say you can hold. You can hold currently. After the stock has corrected, I think if you hold it, you can hold it with a stop loss close to about 710. If you're a very short-term investor, then you can look to exit.
So that's the view with regards to where technicals are, overall the fundamentals are concerned for Vedant Fashion. But in fact, Puneet did mention about Vedant Fashion earnings, and post the earnings, the stock did see a significant amount of tanking, and this was because the overall net profit was down by 12%. Margins also significantly reduced to 45% from that 48% mark. Cost of raw materials inched up quite significantly, and other expenses also were up by 20% and that's kind of reflected in the stock performance since the earnings came out. All right, the next question is on Hudco. Rohit is writing in and has 1,000 odd shares bought at 280 a piece and wants to know as to what should be the next course of action for him. Kush, on the charts, from a longish period perspective, what's the view like?
We might suggest an exit on this one. It's incidental that today on our advisory, we've released a short call on Hudco with lower targets of 210 and 206, stop loss around the 280, 220 resistance zone. I think there is some consolidation happening with a negative bias. Even on the higher side, you'll find resistances around the 230 to 45, 230 to 235 zones. So all in all, it's not auguring so well just yet. There were a couple of moves that came about, but that rally fizzled out at the 200-day moving average, and now the stock is down again on the back of fairly decent volumes. If you see yesterday and today also how things are shaping up. So at the moment, things don't seem to be going its way. So I would rather suggest an exit on Hudco.
The view coming in where technicals are concerned for Hudco. Our next caller, Ishwar, is calling in from Andhra Pradesh. Ishwar, a very good morning to you. How can we help you? Hi Ishwar, can you hear me? Okay, I think we seem to have lost him, but we do have his query. His query is on Canara Bank. He's holding 1,000 odd shares at 92 a piece. We have one more viewer who has written in and wants to know about Canara Bank. He's bought at the levels of, okay, we don't have his level, 92. And wants to know, so both of them have bought at the levels of 92. I believe I'll take the technical view as well as fundamental view on this particular counter. Shaina, I'll come to you first. What's the view like?
In terms of valuation, Canara Bank is pretty attractive. It is just about 0.8 times price to book. So I would say, and it is one of the better performing banks. Balance sheet has improved in terms of NIMs. They're expected to remain stable. So I would say you could hold. You could hold with a target of close to, I would say, 100.
And Kush, what's the view like where technicals are concerned?
So I think from a very near-term perspective, the pressures could perhaps remain on because some of the PSU banks have had a rally, but again they've fizzled out. And as far as the pecking order goes in the PSU bank, in the PSU pack, there's SBI and then there's Canara Bank and then there's everyone else. So from that perspective, I think you could continue to hold. I can understand why this 92 level has been a level where the stock being bought by a couple of them has been the recent low, but you could see some sort of sideways consolidation. So my suggestion would be to keep a stop loss near the 89 mark. That's where the 50-day moving average support will come in. But on the way up, you could look at targets of 97 and then about 100, as even China has concurred. But my suggestion would be to keep exiting as the stock rises and keep tailing the stop losses higher. You could see some time, some sideways consolidation, hence the momentum might be missing in the likes of Canara Bank and some of the other PSU names.
Got the view, Kush. The next query actually is on stock Anupam Rasayan in the chemical space. This query is coming from Rajesh Maheshwari from Indore. He's holding roughly 125 shares at 852 rupees per share, and it's a long-term holding, but he's also wanting a short-term outlook as well. So let me come to both of you. Shaina, let me come to you first. A chemical stock has been doing decently in terms of quarterly earnings. How do you view the same?
Yeah, so the numbers, even if you saw the last quarter, were pretty good. So expecting a good set of numbers, and I think the overall sentiment for chemical stocks is better now that China is sort of facing a lot of difficulties, and India should actually gain on that. So I would say it's a hold at current levels.
Okay, so
And sorry, just let me get Kush's view also. Kush, 26% year-to-date movement on the stock. Do you see any further upside on charts?
Well, it's not a bad setup, I'll give you that. But what's happening is that, from a very near-term perspective, the stocks actually just hit the overheated territories on the daily setup, and hence some profit booking cannot be ruled out. So if he's quite active, when it comes to trading, it'd not be a bad idea to book partially right now, say about 50% or so, maybe a little less, and then re-enter, close to the 890, 895 zones, as and when you see some sort of profit booking, which eventually might come in. It's had 5 weeks of gains, which is quite a healthy sign. But I would book partially and then re-enter at the 890, 895 zone. Also, this is a view if he's a very active trader. If he's a long-term investor, then he should continue to hold. On the upside, you're looking at targets of 955 and about 995 in the coming couple of months.
okay, so that's the view with regards to where Anupam Rasayan stands. All right, our next question is from Vipul Seth, who's holding Bayer Corp Science, 15 shares at an average price of 5,581. Wants to know whether he can accumulate more, sell or book loss right now. He's sitting on a loss of roughly 13,000 odd rupees right now. Shaina, he wants a fundamental view on this one. What's the view like?
I think if he's a short-term investor, he can actually switch. There are better stocks available in the sector. But otherwise, I would say the overall sentiment, as I said, for chemical stocks overall is better. And especially exports to Europe should actually pick up. So you can hold if you're a long-term investor. And maybe you can hold with a target close to about, you can hold with a target close to about 4,800.
Got the view, Shaina. We are actually getting a next caller in from Kolkata. Avi is dialing in for a stock query. Avi, good morning. Welcome to Ask Profit. What's your query?
Hi, good morning to everybody. So my query is, actually I've got 1,000 shares of Northern Capital bought at 173.37. So I want to know whether I should hold it or exit.
And do you want a long-term view on the stock, Avi?
Yes, the plan was at least 1 year, but now looking into current situation, there is so much of uncertainty. So I'm just confused at the moment, what should a person like me do?
Fair point, Avi, because we've seen correction as well in the microfinance as well as the mid-tier banks. Shaina, let me come to you first for a fundamental view. From a buying price of 173, stock has gone up to 208 now. Do you suggest holding on to this new listing, or to avoid it, sell it for a viewer?
In terms of valuation, it's not too expensive. It's one-time price to book. At the same time, that I think it's a small cap. So I think in this current market, it is better to stick with the larger corporates. So basically, I would in fact stick to the larger banks also in this sort of a market. And even if you're looking at the MFI space, I think it's better to be with the larger players rather than the small cap companies. So I would say a switch.
Okay, so that's the view with regards to where Northern Ag Capital stands. Our next caller, Raju, is calling in from Andhra Pradesh. Raju, a very good morning to you. How can we help you?
Yeah, good morning. My query is regarding Anantraj.
Okay.
I own 100 shares at the price of 460.
465 or 460?
Yes, 460.
Okay, okay. And
my query is about I want to hold this for next 3 years actually. So is it good to accumulate more or?
okay. Okay, got your point, Raju there. Shaina, I'll quickly come to you on this one. There was a time when there was a significant momentum seen in this particular counter on the back of data centers that, it's trying to build in. What's the view like from a 3-year perspective? Should one continue to hold the counter?
It looks decent, at least for the current period. At least you can review it after maybe 6 months, 1 year. They are done pretty well in the last quarter. And at current levels, I would say that you can hold, but do keep a stop loss. Keep a stop loss close to about 440 because, it could correct in the shorter term if you're like, say, a 6-month investor. But for the medium to longer term, you can review after a year.
Got that, Shaina. Shaina and Kush, please stay on. We'll just take a very short break. More stock queries on the other side. Stay tuned to Ask Profit.
तू ही तो है जिसकी सच्चाई वाली क्लैरिटी की वजह से मैं आज यहाँ हूँ।
गोल्ड प्लस सिल्वॉक्सी मिरर्स, ऐसी क्लैरिटी कि आपको सिर्फ सच नजर आए, चाहे कितने भी साल बीत जाएं।
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Welcome back to Ask Profit. We are getting another query on from a caller. Mohan is dialing in from Warangal. Mohan, good morning. Welcome to Ask Profit. What's your query?
Good morning, sir. Good morning, sir. Very good morning, sir. I want a query on Tata Motors.
And do you want a long-term view or a short-term view on Tata Motors?
Short-term view for 6 months.
For 6 months.
Is it right time to buy in this market price? And just now it is quoting now, I think,
Right, 697. Correct.
5 or 96.
Yes. Since the short-term 6-month view, let me go to Kush. Kush, on the fundamentals, there is a lot to talk about. Getting impacted from US tariffs, the UK FTA is a positive. Is the chart suggesting any positive price move on Tata Motors?
So, we've had a breakout yesterday where the 675 resistance zone for the last, 5 to 7 trading sessions was taken out on the back of very decent volumes. But I'm afraid from a very near-term perspective, I think, you have to wait for the 700, 705 zone to be taken out. There's a gap that was created around that level. It's coming to be filled in just now. Plus, also, you see some call conditions around the 700 mark that will act as a bit of resistance. So, while the near-term trend does look positive, I would suggest just wait up for some time, let the 700 and 705, supply zone be taken out, be cleared, and then you can perhaps go and buy. Otherwise, what could happen is that, you could either see some sideways consolidation or perhaps, the stock dip a little for investors who've been holding it on for some time now and haven't really seen any kind of, profits on this. So while the near-term structure, as I said, is turning positive, wait for the 705 mark to be taken out on a closing basis, and that's when you can consider. Even after that, from a 6-month perspective, the risk reward ratio will be fairly favorable for targets of 755 and about 790 and 675. That resistance level will now start acting as a support and hence as a stop loss.
Okay, so that's the view with regards to where technicals are concerned for Tata Motors. Our next question is from Sai Karthik, who's writing in all the way from Dallas. He's holding 1,000-odd shares of Bajaj Healthcare at an average price of 521 and wants to know the prospects from a short to mid-term perspective. Kush, I'll come to you again. What are the charts indicating for Bajaj Healthcare?
Very interesting moves on this one, actually. The stocks run up quite a bit, then seen some profit booking and is now trying to find a base near the 510 zone. I would suggest, taking a position at Bajaj Healthcare. My only suggestion would be take a small quantity because the volumes on the way up aren't really as strong. That will suggest that, everything's in the clear and the stock is now ready to soar to 625, 640 odd levels. But nevertheless, there are, early signs of base formation near the 505, 510 mark. So yes, you could start accumulating the stock at this level, and as I usually suggest, add more as the stock goes up. So in this case, your stop loss will be at the 510 mark on the way up. You're looking at the first target at about 595. Once that is taken out, even a 640, 640, 645 zone will also come into play. But this is one stock that you'd want to accumulate as it goes up and not average on the way down.
Okay, so that's the view with regards to Bajaj Healthcare. Our next caller, Santosh, is calling in from Hyderabad. Santosh, a very good morning to you. I believe you have a query on IRCON. Hi, Santosh, can you hear me? All right, we seem to have lost him, but we do have his query. Santosh is holding 650 odd shares of IRCON at 189 a piece. Shaina, I'll come to you on this one. What's the view like? Should he continue to hold?
I think he should switch at current levels because if you see IRCON in terms of their operational performance, it has been a bit disappointing. It is, it is a small cap and of course it's government owned PSU. But at the same time, I would say that, in terms of operational performance, it's been a bit disappointing. I would say a switch. There are better quality stocks available in the PSU space. Even something like a defense, I think as a sector would look better at current levels.
Got the view, Shaina. We have a next query on WhatsApp. Tejas Sheth is writing to us from Mumbai. He's asking for a question actually on Easy Trip. He's holding 10,000 shares at just 18 rupees per share. Kush, let me come to you on this one because we've seen all kinds of negative fundamental news on this counter, management changes, venture into unrelated businesses. And on the charts, does it suggest any kind of positive price move so that if need be, our viewer can exit the stock?
So, Puneet, I think the only positive that is seen in the price action and hence on the chart is the fact that the stock actually stopped falling. It's gone into a sideways consolidation. I think which you could take as a first positive sign for the stock to actually start gaining ground. Now, at the moment, what I could suggest is have a stop loss at the 11 mark. That's the 11 to 11.5 is the zone where the stock has taken support at multiple times. So I'm suggesting that as a strict stop loss because if things were to go south, then you could see much lower levels on this one. But for the last 2.5 months, for the most part, the stock respected the 11.5 zone. Once that is held for some more time, I think investor confidence might return and the stock might go higher. But my suggestion would be to start exiting at intermediate levels of about 14, 16, and then perhaps closer to the 18 mark. Not sure if in the coming weeks or months time the stock could actually go to his buy price of 18. So my suggestion would be keep a tight stop loss at 11 and start exiting at slightly higher levels. In that case, your loss will actually start reducing from the current level.
Okay, so that's the view with regards to where Easy Trip stands. Our next question is from Naman, who's writing in from Kolkata. His question is on his question is on InfoEdge, and he wants to understand both fundamental as well as technical view on this counter. I'm not sure if there's an X split today. Shaina, if you are aware of this, is that correct? Is there an X split for InfoEdge today?
There is a split. One sec, I'll just check. I think the split is 7th of May. Yeah. So basically, that would fall into effect. That is, old value is 10 rupees, split to 2 rupees. So that would be there. Of course, the stock is actually moving up because there are a number of positives that are coming in. So I would say this stock is a hold at current levels. There's a lot happening, and one can hold at current levels.
Quick technical view on this, Kush?
Not a bad setup. It's just that on the higher side, about 1450 odd, the stocks made triple high kind of a formation where there is some resistance. But I think on the whole, the moves and the recovery on this one has been fairly sharp. Yes, you could continue to hold. Stop loss on this one is close to the 1330 mark.
Got a view, Kush. We have a next caller from Bengaluru. Murli is dialing in with a stock query. Murli, good morning. Welcome to Ask Profit. What's your query?
Good morning. Thank you for taking up my query. I bought Free Cement at the 10 shares at the rate of 30,545.
Okay.
Now I am incurring a loss of around 11,000 rupees. There are two options. Just I want to confirm, take your advice. Whether I should add more considering the good results of Ultratech, Ambuja and ACC, or should I switch over to Abbott India, which is available at a similar price level,
okay,
which is also equally a solid company.
Got it. Let me go to
So
Shaina.
they are different industries. Yeah.
Got the view, Murli. Thanks so much for dialing in. Shaina, let me come to you because, the cement space prices were very, low over the last year. They've started, increasing all players. Do you suggest our viewer to stick with Shree Cement? He's currently holding 10 shares at 30,545 per share.
Yeah, I think it's better that he continues to stick to this stock for now. Basically, volumes, as you also mentioned, are improving. And I would believe as the averages realizations go up, they should do better going forward. So I would continue to hold and keep a near-term target of close to about 31,000, and then you could review it again.
Got that view, Shaina. Now, the next is a WhatsApp query from Hyderabad. Naga Kumar is writing in for a question. He holds 100 shares of Eicher Motors purchased at 5,500. He's asking a view on that stock and also asking if any negative view, if he should switch to Tata Motors. So, you answer the Tata Motors part. Let me come to Shaina, to you back because of a fundamental view on Eicher Motors. Do you suggest sticking with this counter?
As of now, Tata Motors does look like a bit better than Eicher because of, what is happening on the tariff front, and Eicher would be impacted in a bigger way. Tata Motors is a positive, as we're hearing, in terms of they're starting to again export to the US market. And so to that extent, it looks like a better shorter term view. But if you're the long term investor, you could continue to hold. You could hold with a stop loss close to about 5,000.
Okay, so that's the view with regards to where Eicher Motors stands. The next question is from Satyan. He wants a view on Supriya Life Sciences for the next 1 or 2 odd years and wants a fundamental view again. Shaina, I'll come to you. What's the view like for Supriya Life Science?
I think I'll pass this question.
Okay, Kush, then any view with regards to where charts are concerned? What's the kind of support and resistance that you're observing?
At the moment, the stock is at the 200-day moving average support, near the 640 mark. but is really not got anything going for it in the sense that, for almost all of this calendar year, it's stuck to a broad range of about 610 on the downside and a slightly higher one, which is about 770, 780 on the upside. If he does want to make this range play, then the risk reward ratio is fairly favorable. So with a stop loss around the 610 mark, we could consider a long position on Supriya Life Sciences. 685, 690, that's your first target. Once that is taken out, you could still stand and continue holding this for the 750, 770 zone as well. But it's a range play, and you could see the stock spending some more time in this band. So momentum might be missing, but from a range perspective, the risk reward ratio seems favorable.
Well, that's the view on something like a Supriya Life Sciences. The other query which we have is again on WhatsApp. Ashutosh is writing in from Pune. He's purchased 30 shares of JK Tires at roughly about 300 rupees per share. He wants a view of a longer term view to, for any kind of returns. Shaina, let me come to you on this again. All tire makers, have been impacted because of high rubber prices. Do you suggest staying with this counter of JK Tires or switching to any other company in the tire space?
No, in fact, tire companies are coming out with decent numbers actually, and basically the raw material prices are going down. Crude as well as natural rubber, synthetic rubber, they are the main raw materials. So, after a bit of a disappointing last quarter, numbers are expected to be better in this quarter coming forward, the March quarter. So, I would say you can continue to hold JK Tires. You could hold it with a target close to about 360, and you can keep a stop loss of close to about 310.
Okay, so continue to hold is the view coming in on JK Tires. Next caller, Shiva Kumar is calling in from Bengaluru. Shiva, a very good morning to you. How can we help you?
Good morning. I would like to enter Bharti Airtel.
Okay.
Is it the right time to enter Bharti Airtel, and how is it technically poised, and what is the target you are placing it for another 2+ years?
Okay, 2+ years. Got it. But since you want a technical point of entry, I'll take this up with Kush. Kush, is this the right time to make an entry into something like a Bharti Airtel?
It is, Mahima. In fact, it's just the other day, about 2-3 days ago, that we released a long call on Bharti Airtel, on our advisory as well. The reason being that, this stock has, negated or averted, any kind of pressures that were there in the market and has continued to rally higher. We've seen, good build up on this one, in the last about, 15 odd sessions also. Some profit booking, but the recovery was also rather strong on this one. A couple of technical parameters that could perhaps, suggest some sideways consolidation is that the 1900 mark is proving to be a bit of a resistance. And then there is, this negative RSI, that is starting to develop, which could suggest that the stock could consolidate for some time. But since his view is about 2 years and longer, I think he should very well continue to, hold, or in fact, he could go ahead and add at the current level and even accumulate as long as the stock remains between the 1850 to 1880 zone, which it is at currently. From about a 2-year standpoint, I think 1990, 2050 are the targets that he could look at, and a positional stop on this one comes much deeper, closer to the 1775 mark. So on the whole, the stock has done well, continues to impress, and also let's not forget that Bharti comes with a certain degree of margin of safety. So with the kind of volatility that we're seeing closer to home and across the globe, I think Bharti makes a good buy at this level.
Got the view. Question on fundamentals as well, expecting a decent results from Bharti Airtel in Q4. The next query is again a WhatsApp query from Purna Chandra Rao is writing to us. He wants a view on Birlasoft, which is the IT major. Shaina, let me come to you on this. He's already holding roughly about 1,000 shares bought at 450 rupees. He bought this 3 years ago. So what's your view currently on this stock? Stock generally trades at a lower price to earning multiple compared to its other mid-cap peers. Do you have a positive view on Birlasoft?
Yeah, actually, the stock had corrected a lot after the very disappointing Q3 numbers, where we had seen both the revenues and as well as the profits coming off. But I think, overall, the sentiment is improving and they are moving towards the $1 billion revenue. So I would say it's a hold at current levels.
Okay, so hold is the view coming in on Birla Soft. All right, our next question is from Anish, who's writing in from Hyderabad. Not sure, Shahina, if you have a coverage on this one because it's a recently listed company, Aether Energy. He's got 46 odd shares and got the IPO allotment and wants a view on this particular counter. Should he continue to hold?
I would say it's a risky bet because there's a lot of competition coming in this segment, and they are making losses. So I would say take any upside that you can get and switch.
Got the view, Shaina. We have another query from Bangalore coming in. Sunita Rai is writing to us. Best level to enter Bank of Maharashtra as well as Bank of Baroda. Those are the two queries. Shaina, let me come to you on this. Bank of Baroda results were a little iffy to say the least. NII fall in this particular quarter. Do you have a view? We've heard your view on Canara Bank. Any of the views on Bank of Maharashtra or on Bank of Baroda?
Bank of Maharashtra looks decent at current levels, given the fact that valuations are quite decent, attractive, and even the numbers I expect are quite good. So Bank of Maharashtra balance sheet also improved substantially. If you see the quality of the net NPAs, they have absolutely improved. So to that extent, Bank of Maharashtra looks like a better bet. And Bank of Baroda, of course, is the larger one. And for the longer term investor, you can look to add at lower levels, but at current levels, I would say it's an avoid.
Okay, so that's the view with regards to where both of these banking counters stand. Shaina and Kush, it's time for the rapid fire segment. You know the drill. Keep answers as short as possible and we'll try to throw as many questions as possible at you. The first question is on KR and Heat, a newly listed company. Shaina, what's the view like? The person wants to know, should he wait to enter or should he enter at the current levels?
He should wait to enter. Wait.
Got the view, Shaina. The next query is from Anil from Bangalore, asking a view on Vodafone Idea. Kush, does the chart suggest any positive momentum on Vodafone Idea?
Avoid.
Okay, the next question is from Tamil Selvan, who's writing in from France. He wants to know on Chola Mandalam Finance, what's the view like? It's fairly a short-term view. Kush, what's the view like on the charts?
You could continue to hold or even consider adding more. Stop loss near the 510 mark, and on the upside you're looking at 1620 and 1660 as target.
Well, next query is from Prakash from Bangalore, asking a view on Apar Industries, priced 7,200, holding 150 shares. Shaina, do you suggest holding the stock going forward for Prakash?
You can hold with a stop loss of 4,300.
Okay, the next...
6,000. Yeah, you can hold with a stop loss of close to about 6,000. Yeah.
Okay. The next query is on SpiceJet. The person is holding 45 odd shares. Should he continue to hold? Shaina, your view?
I would say it's a switch to Interglobe.
Well, next question is, specifically which we are getting in is on Paisalo Digital, not a stock that we speak about a lot. Kosh, anything on the charts suggesting any kind of view on Paisalo?
Some consolidation, but not enough to suggest a very strong buy yet.
Okay, Piyusha Raj wants a view on Coal India. Shahina, your view from a longer term perspective?
I would say switch.
Next question is on IRFC. Kush, anything on the charts suggesting a buy on IRFC?
No, not yet. And the stock's seen some pressure. So once it crosses the 127 mark, perhaps then, not at the moment.
Well, Kush, Shaina, thank you so much for joining in, giving us a whole host of views on both these stocks as well. But we have a management right now as well. And, Mahima, before we go, Blue Star came out with its quarterly earnings yesterday. What were some of the key highlights?
Right. So in terms of the numbers, earnings did beat estimates. April has been soft for them, but overall demand is expected to rise in May and June. Numbers were something that did beat estimates. In terms of the overall revenue, it was up 20 odd %. The EBITDA was also up 15 odd %, and in terms of margins, they stood at 7 odd % and net profit was up 21 odd %. In terms of the segment revenue, electromagnetic projects did perform well, around 30% growth year on year, and the overall unitary product segment also grew by 15% year on year, and we are joined by Veer S. Advani, Chairman and MD at Blue Star, who is joining us now with more details as to what the future of the company holds and how quarter four panned out. Mr. Advani, before I move on to the details as to how Q4 has panned out, your view as to how the overall earnings were in terms of FY25 as well as Q4. Was it up to what you expected, or there was something better on the cards?
So thank you. Thank you so much for having me. I want to say that we are extremely happy with our results for the year. We crossed 12,000 crores of total income. We were able to grow our EBITDA by 32% to 876 crores. Actually, the EBITDA margin improved from 6.9% to 7.3% on a full year basis. And the carry forward order book is also at an all-time high. We grew that by 10% to over 6,000 crores. So most of our financial objectives have been met. Of course, Q4, we could have hoped for a little better. I think that, we did well overall. Revenue grew 21%. EBITDA grew 15%. So slight erosion in EBITDA margin from 7.3 to 7%. But we're not concerned about that. That's more to do with the mix of business. You would have seen in the standalone Q4 that our segment one electromechanical projects has grown by about 30%, much faster than our unitary products business has. So it's really a mix of business issue rather than it being any structural change. So very good overall. Of course, March was a good month. Again, there was a lot of buying of room air conditioners by the channel in anticipation of some shortages in compressors. So that did help Q4. Billing, you did open by saying that April has been a soft month for the industry. We know that there's been rains all over the country, so not the best start to the new year, but we continue to be optimistic.
All right. Mr. Advani, in everything you said, I'll, go one by one in terms of each segment that you talked about, that is your UCP as well as electromechanical projects. For UCP, UCM, the margins were overall slightly lower than what the street was expecting. I want to understand, because overall in that particular segment, margins have been under pressure. So I want to understand as to what is the next growth prospect there? Is there a scope of improvement going forward? And if yes, what are the levers?
Sure. So, segment 2 for us is our unitary products business. So their EBIT margin was actually quite good. For the full year, it was 8.4%. For the standalone quarter, again, it was 8.4%. Full year improvement was 7.8 to 8.4. So we've done better than last year. There has been some economies of scale and leverage coming on account of the higher volume. Overall volume, you would have seen, grew by about 22%. So it was reasonably good. I think that you do know that this segment has two businesses in it. It has our room air conditioner business and it has our refrigeration business. So actually, for the last year, the refrigeration business has not done as well as we had hoped. There were regulatory challenges in that business. There was also some soft demand from FMCG, ice cream, etc. So we would have wanted better outcomes from our refrigeration business. Had the refrigeration business grown at the rate we expected, you would have probably seen segment 2 revenue growing by about 5% more. From 22%, we would have probably shown about 27%. And EBIT margin would have been higher by about 0.5%. So we'd have been closer to 9%. So we're quite happy with the margin profile. Going into the new year, of course, whenever it's a soft summer, you sometimes see pressure there. The only difference in the new year now is that while there is inventory in the channel, naturally, there isn't that much inventory with manufacturers, because unlike in the past, we're all manufacturing in India, so we're able to control our production quite efficiently.
Right. So is that the same case for your electromechanical projects as well? Because it's been a strong quarter for that segment, but overall margins are still slightly under pressure. So what do you reckon? Is there a growth prospect there, or margins will continue to remain at the same levels that they are right now?
So we closed the year at 8.2% margin in our for segment 1. Q4 was 7.6%. I think that our outlook for segment 1, so volume growth has been strong, order booking has been strong. Even as we go into the new year, we're quite happy with order inflow. Government spending is back. There's been very strong spending by the manufacturing sector, by the data center sector. So these look good. Of course, with this India-Pakistan issue right now, there may be some cooling off on some private capex, but we still are optimistic for the full year. So I think outlook for that business is good. From a margin profile point of view, I don't think there's going to be margin expansion there. I think we're happy with the margin levels that we're able to get right now.
Mr. Advani, good morning and thank you so much for joining in, sir. It's Puneet this side. Just one question I had on inventory. Specifically for you, we were at multi-year lows in the same time last year. How are the inventory levels now? I'm sure they are above the current level because we've seen steady increase over the last 3 to 4 quarters. How are the inventory levels as of now for the industry and for you, if you can quantify it?
Yeah, so inventory is important. So you know that the channel bought in advance in March in anticipation of compressor shortages. So there is a heavy amount of inventory in the channel. We estimate at an industry level, there's about 2 million units of additional inventory in the field than there should be. So that inventory level does need to come down. We're still hopeful that IMD is still forecasting a hot summer. So even though we've had a washed out April and a slow start in May, we're still optimistic that the rest of the summer should be okay. So with that, we will see tertiary sales picking up. We'll see channel inventories coming under control. As we said, as I had mentioned, because we are all locally manufacturing, I don't see an inventory pile up of finished goods with the manufacturers. We may be holding raw materials and components, but that's actually fine because, very frankly, even if it is not a very hot summer, given the demand, the latent demand for the category of room air conditioners, we will still expect the industry to grow by 15% over the year. If it's a hot summer, then we do better than that 15%. And that's what happened last summer as well. So I think inventory levels are well within manageable levels to do that 15 to +% growth for the year.
All right, so that's the way with regards to Blue Star and how Q4 and FY25 fared and what FY26 holds. Mr. Advani, thank you so much for joining us and giving us all those insights, and all the best for FY26.
Thank you. Thank you.
All right, with that, it's a complete wrap on this edition of Ask Profit, but stay tuned. Know your company on the other side, so stay tuned.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know your company, powered by NDTV Profit Research, shines a light on the